Over my 4 years of trading, I've gone through different strategies, but there's one thing that has never changed, which is my way of approach of structure. There's something that I knew about structure that has worked so well for me and has made so many of the strategies which I've tried out work very well. So there are so many things where people make mistakes, like they think there is a liquidity sweep. For example, inducements. People trade inducements where we get structures. A structure price will go or come back, take out the low of that structure before pushing. Some people think it's inducement, but sometimes it's not actually inducement or price balance. So that is what I'll be showing you here on the chart. Let's get on the chart and I will show you examples of how those inducements aren't inducements and exactly how I trade structure. I haven't seen this anywhere. I haven't seen anyone teach it on YouTube. This is my personal experience from the chart. Let's get into the chart. So let's start from the basic higher highs and higher lows. So basically, from textbooks, from free websites, from PDFs and all that, we have seen structure to be explained like this. We see things like this: higher highs, higher lows. Let's do higher highs, higher lows, higher high, higher low, higher high. So we have this here on the chart. We have this here on the chart. We can see the structure here. We can see price is going up. We are creating structures to the upside. But there is something about this structure which is not actually very, very valid. Trust me, when you actually understand this about structure, go on and back test. Trust me, you are going to see this working on your chart a lot of the times. So we have this first higher high, we have this higher low. But the thing is that inside these structures, there are ones that are invalid for this whole trading leg. So first of all, once we have structures that are creating to the upside, the first thing we want to identify is the leg from where it's coming from. So let's say there was a bigger structure like this. There was a bigger structure, probably from higher time frame. We have these very big structures. Let me see, let me increase this size. So let's say we have a bigger structure like this from higher time frame. But then we just want to focus on the structures that is coming from this point to this point. So we have our low, we can mark out our low and say that this is our low, this is our high, and this is the trading leg which we want to focus on. This leg here. This is a trading leg we want to focus on. So we have these structures here. First of all, you have a higher high, a higher low, a higher high, a higher low. Just as I mentioned before, inside these whole structures, not every pullback is a valid structure. Not every pullback is a valid structure. I have seen this happen a lot of the times, and there is this point in trading where it almost looks as if these structures are not random. Yes, when you go back to backtest, you will see this happen a lot on the chart. It is almost not random. And if you really understand this thing, at this point, you would be able to catch the best reversals possible. Yes, you won't be caught by fake reversals where we can get something like this, a break of structure, for example, a change of character, a market structure shift, or a break of structure. Anyone, we have this, and then price might eventually take you out, and price will eventually take you out. If you really understand structure very well, the chances of this happening to you is going to be low, very, very low. You can then catch great reversals. So what is that about structure that I know or that I've experienced that makes it very, very well and works on almost any approach I give? Because trust me, I believe we all agree on this, that structure is one of the most key and most important thing in trading. I don't know, the people who trade without structure, I honestly don't know how they do it, but then there are different strategies and all that. So let's get back to the chart and explain what we can see here. So we have this structure. Let me mark out the structures I can see here. We have this first structure. This is just based on marking what I can see. So we have this structure to this point. So we have 1, 2, 3, 4, 5 structures. But there is one thing that is making some of these structures not valid, which is balance. You need to understand, when you understand structure, you need to also understand impulse balance and as well correction balance. But in this video, I'll only be explaining correction balance because that is the most important. Impulse balance doesn't really matter. It is only when you want to catch ping pong trades that if they go up, you want to sell. When they sell, you want to buy and all that. But catching the impulse is what is very important. So once you understand balance, pullback balance or correction balance, that is enough to help. That is enough to make you trade easily. Having one approach is very good, is very simple to work with. So we have these structures here. What can I see? The first structure that I can see here, which price pushed, pull back down and pushed up, this is the first structure I can see here. So since I have this structure, what is now my rules to validate the next structure that is coming in? My rules to validate this next structure that is coming in here is that this next structure, my rules to validate it is that I need my structure to balance this pullback. So what do I mean by balance? I need this structure to be very alike with this previous strategy. Please make sure you're paying attention here. It is very important. You can go back to your charts, back test, and you see this happening exactly the way I'm saying it. So we can see this, a pullback, a push to the upside. This structure does not balance this one. So I need price to at least have the same length or the same flow as this, because there are times where this will be like this, but then this is too stretched like this. But if you look at from the flow, you can see that the pullback has the same length. So you're looking for it to have exactly, not really exactly, but very close, that it is very easy for you to identify. If, take note of this as well, if you see that it is giving you a hard time to identify whether the next structure balances the previous one, just avoid it, because it is something that you can easily spot out anytime you come to the chart. So this structure here does not balance with this, is not as the same length as this one. So what I'm then going to do, I am going to remove this as my structure, because this cannot be my structure for this whole leg. Remember, that is why we have a trading range from this low to this high. So this structure is not part of the structure, the dominating structure from this low to this high. So we have this, and then next, this is the next structure. So even after creation of this thing, you are still going to avoid it. Yes, we got a pullback and then a push to the upside. We are going to ignore it as our structure. We are waiting for another pullback. So we then get another pullback here, which obviously we can see this balances this previous valid pullback. So this wasn't the valid pullback. You cannot say, okay, since we have this previous pullback, I'm waiting for it to balance this pullback and then I'll continue. No, you will be focused on this major structure. So we're going to get price to push down and then validate the structure for us. Once we have this balance about the same length, which let me mark it out so that you can see this clearly, so that you understand exactly what I mean. So it is the pullback you want to be balanced. So once we have that pullback, we still have another pullback here. You can see price came back, balanced it. It's almost the same length, and most times you're going to see it is almost perfect. That's why no matter what strategy I'm trading, no matter what approach I'm trading, I will always have this in my system. So it balances that. So after breaking this high again, we now have a confirmed structure. So basically, this is our focus structure here. Here, we're going to ignore that here, and then we're going to continue to the upside until we get another balance. So on this fourth structure here, this is not a valid structure for me. This is not a valid structure. This next one as well is not a valid structure. So notice how all these are just minor structures. They are not balancing that. There you can even see at some point one will be as significant as this, but then it doesn't balance this one. That makes it invalid. Ignore the structure. So as I was saying, talking about inducement, We know how traders trade inducements, where we get something like this, like this. Yes, exactly, this example. So there are traders who trade something like this, a break of structure from here, a break of structure, probably an order block or something. I don't really trade directly this, but then I just want to give an example because I know most traders actually trade with this system, but you can take note of this. And then they use this point as inducement and say, okay, this is liquidity. What happens here most of the times, or let me drag this down a little bit. Let me take this up. So they say this is structure from this downside. Let's put it from this downside. So we have this structure here, price pushed up, give us this little pullback, and then pushed up to the upside again, push to the upside. So traders say this is inducement, but what normally happens here is not that price was coming back to take out this inducement. If you notice, well, price is just coming back to balance this previous impulse, this previous retracement rather. So we have this retracement. What price does is that it comes back and balances that. So another rule to this balancing is that it can be the same length or more than that. Yes, for just from this example which we are doing here, glad I didn't lose that. Take note of this. It can be as the same length or more than that. It should not be less. It should not be less than the previous structure. It should not be less than the previous structure. So you can see this length, the length of this structure is way more than this structure. So our focus will be on the length. It should be the same or more than it. If you know this about structure, trust me, things are going to change for you. So let's say, for example, this one is more than this length. When we are looking to get another structure, what are we going to expect? What we would be expecting is another as long structure or the same length as this on the next structure. Yes, on the next structure. We are not going to focus on this one. It is always on the previous structure. So we had this price balance and went beyond that and then broke structure. So if we need to get another structure, we need price to come back and balance at least this structure as well. So when we get this and then price push, we now have a new structure. So that is what happens when it comes to this inducement explanation which I'm talking about, this liquidity here. When I say, okay, price is coming down to take this liquidity, it is just that what is happening, price from this leg to this leg was creating structures for a while, and then we had already had a higher time frame pullback here, and price has been buying for a while. What we are going to expect is price to pull back, because price just doesn't go up straight. You're going to expect price to pull back, balance the previous structure before pushing again. So if you're just focusing on the lower time frame, you're trading this, you should expect a pullback. So it is that pullback that price did here, and this is where smart money concepts traders say, okay, it took out inducement. To me, mainly, I don't see it is just inducement it took out. It just wanted to come back to balance this structure. So while it was in this leg, it was balancing its own structure. It was doing all this, balancing its own structure, creating this one. Eventually, it is going to end, and then it will need to come back to balance a higher time frame structure. You can see how clean this is. Go on to the chart, back test this, you're going to see this thing. It works a lot of the time. So we now have this price will come back. You would think it's a liquidity sweep, and then it will balance this structure and keep pushing to the upside. So that is an explanation from the inducement. So from here as well, after we have this structure, price pushed up, we have this structure, price pushed up, we're expecting another balance at this point, which is price pushing down and balancing this structure here by creating the same length. And when we get a push to the upside, this is now a creation of another new structure for us. So you can see this. You can see how clean this is. So at this point now, this is where I was talking about. This won't make you make mistakes when it comes to reversals. So if you are considering all these structures like this and not focusing on the balance, this is what you're going to notice. You might say this is a change of character, a market structure shift, or a break of structure. But you are wrong because you're not seeing the whole view of the leg. If you're focusing from this leg, the dominating structure is this structure, this structure, this structure, the bigger structures. So for you to get a valid change of character, you are not going to take change of characters from these minor structures. These minor structures, because balancing the previous valid or strong structure from here, when it breaks, it will come back, balance this, and take you out. For example, you would have your sell position here on an order block or something. On an order block or something you're trying to sell from here, you're going to notice price will break and come back and take it out. Test this, you will see this thing, it works. So the valid break of structure or the valid change of character is when price breaks this major structure, which is this, when price comes back to break. So notice how these are the major structures here. We have this structure, this structure, this structure, until price now broke this structure here. So these are the major structures. This is where you're going to validate that, okay, this is now a change of trend. We now want to start selling, and then you start expecting price to start creating new structure. For example, let's say this time it's creating very little, started with little structure. We know that we already have this kind of push here. We would expect price to balance that push, something like this. You can see balance that push and then push to the downside again. So you would not be confused by saying, okay, this is a change of character. This is another change of character to push to the upside. We want it to balance this pullback here. So this is like a pullback, an impulse, a pullback, an impulse. This is how clean this is. So coming on to the chart example now, we can see, let's use an example from GBP USD here. This is the 4-hour time frame. 4 hours time frame is where you get one of the best structures ever. So this is the example we just got done with. So let's look at this structure we can see here. I can see a very clean example of what I just explained right now. So this is a very big structure from here. You can pick this as a leg. Remember, you need to get your trading range first. You can get this as a trading leg to this high as a trading leg. So if we have this as a trading leg, watch this. We have this impulse. This pullback. We can just ignore that since price pushed down and still broke structure again, which is this. Let me pin that out. This structure here, we can just ignore it because price pulled back and then later broke structure. So let's just focus on what is actually happening. So we have this push to the upside, we have this pullback, and then price pushed up. Notice this, all these structures are not balancing this bigger one that happened at first. They are not balancing that at all. All the structures we have here, they are not balancing that structure. So in this range from this low to this high, this is the structure you're supposed to focus on. If we need to get a very good pullback or a balanced pullback, we should get a structure that should pull back to at least, let me clear this up first. We need a pullback to pull back to at least this level. You can see this level balances this pullback we have here. So once it balances that, if price decides to do this, push to the upside and then break down, we then have a change of character for this structure. So now that is for that focus. Now let's focus on another trading range or leg. So we have this low to this high. From this low to this high, what are the structures we see inside it? Remember, I said the structure can go from small to big. I don't know if I mentioned that. The structures can go from small to big, but it should not go from big to small. So it should always balance from either at same length or bigger than that. So giving the example from here, the first structure we see from this point to this upside is this small structure here. So we have this small structure, price pullback. Just notice how this is very, very clean. We have price push to this upside, it pull back down, balancing the structure. Look at this. You can easily look at this and say, yes, this is a very clear balancing of structure. After price pushed up, this is the previous pullback. So price pullback, balance this structure. Price pullback here and balance this structure, and then we got another impulse. So the next impulse, what are we expecting? We're expecting price to balance this pullback as well. So price got to this high, which is this point, this level here, and then pull back down. So notice how this pullback is larger than this structure. So it balanced it around this point here, but then pushed further. So it's the structure is starting to expand. As it's expand at this point, we can push to the upside, and then we're expecting the next pullback to balance this structure. You ignore this one. So all these are structures. These are the flow of the market. Price pullback, pushed to the upside again, and now we have another balance. Look at this and tell me if it's not a balanced structure. We have this pullback, we have this pullback. Obviously, without using any ruler or anything, this is a very balanced pullback. Now watch this at this point. Price got here, did this. Notice how this flow is different from this. It is very, very little. It is little. This is not a valid structure because it is not as same length or as same flow as this previous structure here. So we got a break of structure. We're expecting this to balance probably at this point, to come down to this point to balance this structure, but it did not balance. It came back down and pushed to the upside. So after that, what did we later get? We later got a balanced structure here. So notice how if you made a mistake, of picking this as your valid structure. You see how you are going to be taking out, for example, if you're taking trades off other blocks here, you would be taking out right here. If you take your entry here, price will pull back, take you out before pushing. So it will take you out and balance the main structure just because you made mistake of how this structure was not balanced. So price pushed up to this high and then came back and balanced. Tell me if this length is not a balanced structure. It's even a little bit more than this, the length. So this is now the balanced structure, and then we now have a push to the upside. So if you can look at this, you can see that there isn't any break of structure in all this. You might be wondering, you traded this point, there was a break of structure on GBP USD, you tried to sell from here, you got a reaction, but price still eventually took you out. It's because you are not focusing on structural balances. So this is how very well structural balance work. You can see this price pushed up. So from here, we're also expecting something like this, a balance of this kind of structure before price will push up. Or if it wants to reverse, we're expecting a sell-off that will break this point, and then we would expect price to continue selling. So let's check for other examples as well. One last example and we're done with the video. So from this high to this low, what is the trading range? What can we see? We can see this. So this is my trading range from this high to this low. What can I see? What are the structures that I can see? We can see this. You see this first structure? Look at this. This is a structure, but this is not even close to this structure. But price created the structure, went back and failed it. If you took this as a market structure shift, if you took this little structure as a market structure shift, you would end up getting stopped out at this point. Do you see that? But if you're just focused on the structure you're seeing, at this is the point where we got balance here. When price pulled back to this point, balance of this major structure. Price got balanced here, but still had to expand. This is where I'm saying it can expand, but it should not be lesser than that. This is less. If it's less, ignore that structure. It is a lower time frame structure, not the main structure. So price pulled back, and then we eventually got another push that broke this level. So after the break of this level, we had this very minor structure. Does this balance this previous pullback? No, it doesn't. So price did this, sold to this downside, and still broke it again. If you're taking this as a change of character, you will end up getting stopped out. You see how this thing works very well. It's almost as if it's not random. Like, this is not random. I have seen this happen over and over again. So price pull back to this point again, balancing this structure, right here. This pullback, we have another pullback. It balanced that structure. After balancing, what do we have? Price will sell to the downside. So we don't have any structure up to this downside. So we can see price just kept creating high, lower lows, lower highs, lower lows, lower highs. There was no break above. If we had this break above here, above this point, this is when we are going to see we have a change of character. We have a break above this high. We have a change of character, and we're expecting the trend to shift. So we did not get that. So with all this structure, this is when price broke this level here. Broke this level. So you can see this will now be our valid change of character. This will be our valid change of character. Or we can also pick this as well, because you can see price push or balanced this structure, push down to validate this high, and then eventually broke it. So this could be our change of character as well. And since then, what have we seen price do? Price has been going up since then. You can see how clean this is. You can see how clean this is. Test this out on your chart, and I'm telling you, you are going to see your results is going to change. It works on every pair. I have seen this work on crypto. I have seen this work on Forex. I have seen this works on stocks and every instrument. It works on almost all instruments. So try this out, and I will catch you in another video.